Welcome to the BF Anderson Technical Report for May 24th. Well, the economy is strengthening. We're seeing it in a lot of different places. I want to mention here this is the US dollar index, which is an index of the dollar versus other currencies. And you can see here that in just recently, the dollar has turned decisively up, and we're seeing the moving averages moving up as well. In fact, we got a golden cross on the 25 and 50. Now, it appears to me that the strength of the dollar has a lot to do with what's going on with interest rates. Now, simultaneously, we're getting a breakout here in the Russell 2000 small cap index to all-time new highs. This is an all-time high for forever, and it's really showing that that because of the dollar strength, you're seeing difficulties with exports. Also, with rising interest rates, these companies don't tend to have a lot of debt, so therefore higher interest rates really do not affect them as much. Also, with what's going on with the tariff talk, the small caps just are not big exporters. They're more U.S. domestic, so they're leading the market. And the tax bill is also helping them. The tax reduction is percentage-wise more dramatic for these small companies than the larger Dow stocks. Now you can see here we have the Dow Jones Industrials. Something is changing here. We're starting to see a change in the market where with the small caps leading. But the Dow did break out of a wedge formation when it broke 25,000, and I mentioned last week that the transports were confirming with the breakout above 10,800. So we have a Dow theory buy signal, which basically means that Dow Jones Industrial Average represents a lot of manufacturing, whereas the transports recommend, mainly transportation stocks. So as we manufacture, we're moving the goods and services around the world. That's very good and means the economy's strong. Now here's the S&P 500. You can see a similar breakout here. Now the other thing to realize here is that as economic conditions improve, interest rates are going to move higher. Now, if you think about this, the last time that we had interest rates get as low as they've been and then turn up was 1932. And this is a very rare thing. And remember, the 10-year Treasury note got down to 1.3% in 2016 and is already crossing above 3%. So what this means is it's going to be a headwind for fixed income type of strategies, whereas when interest rates are dropping, you have the tailwind. Now I want to also mention here that the S&P 600 small cap index has broken out, making an all-time new high. And you just have to notice the fact that it held this trend line, made a low. This was back in February. We rallied, hit resistance, made a higher low, rallied, hit resistance, made a higher low, higher low, higher high. So this is definitely a very strong uptrend for the small caps. This is really good news. Again, this is the Russell 2000 in the form of a ETF fund, and you can see the same breakout. Back to interest rates just for a second. Here's the 10-year Treasury yield. We're entering a part of the business cycle where we are getting economic expansion, which you can see here that interest rates are trending higher. So what I wanted to show here, just to make a point about the risk of higher interest rates for fixed income strategies. This is a fund. This is a fund called the Alerian MLP, which is a master limited partnership, which is, they pay out roughly 90% of all their earnings in the form of a dividend. But, this can be a trap. And I really do think a lot of companies use the dividend as a way to manipulate investors. So this particular fund yields 8.02%. So what I did is I went back to the first quarter a year ago and compared it to the first quarter of this year, and just to show the problem of rising interest rates for these types of investments. So let's say you had $2 million, and let's say you needed the income, the 8% dividend. Well, you would get $160,000 a year in the form of a dividend. However, because interest rates are rising, the value of the fund has dropped somewhat dramatically, And currently, the loss in that fund versus first quarter a year ago is roughly the value is 1.8 million on a $2 million investment after 1 year. However, if last year you would have been in growth stocks, similar to our strategy, the typical return for a growth fund like ours was 30%. So at the end of the year, you would have had, a year over, you would have had 2.6 million, which would have been an additional return because you factor in your loss here, you take your gain here, your additional return would be $835,000, which will pay a lot of bills. So, Gerald Loeb talks about this extensively in his book, Battle for Investment Survival. He basically says that if income is a prerequisite, that is destined for failure. So, you really need to understand the concept of total return. Here's another example just to make a point. This is Campbell's Soup. Now, everybody would think, oh, what a safe investment, good, pays a 4% dividend, blah, blah. Well, okay, you have your $2 million, you get a dividend of $80,000. However, the value of the stock today is $1,236,000, which is a loss of $763,000. After you got your dividend, you've got $683,636 loss. So what we're trying to get across here is that the total return is the dividends plus the gain or loss. This is just not the way to go, and you can see the dramatic loss. Now, also, we've got to think, is the rise in interest rates a short-term phenomenon or a long-term phenomenon? And it looks like to me, I went ahead and put I took off the price of the 10-year Treasury. This is the 10-year Treasury gave a golden cross in March of 17, and is looking like to me it's in a long-term uptrend here. So interest rates may be heading higher for an extended amount of time. Now realize, interest rates dropped from 1982 to 2016, so they dropped for about 35 years. Now here's the top 5. This is Axon Enterprises. Now remember, we're using the top 5 as a watch list only, just to tell us what are the most profitable situations out there right now. Well, Axon Enterprises is the old Taser. They just acquired their largest competitor. They're getting very big into cloud-based video cameras, which are all the policemen in the military can wear. Stock hit an all-time new high here recently at 62. Here is Chipotle Mexican Grill. Now this is a company that was thought to be dead because of all the microorganisms crawling around in their food, but it looks like they brought in new management and they're turning it around. So keep an eye on Chipotle. Here's a integrated oil and gas. You can see that it hit an all-time new high and it's been pulling back, but oil still looks like a place to be. Netflix continues to be strong. What a great service. I mean, my wife and I use Netflix all the time. Their original programming is really doing well. This is a really good-looking chart. This stock broke out to all-time new highs yesterday. Here's a financial, SVB Financial. So in conclusion, what we're saying is the dollar is strengthening, the economy is getting stronger, small caps are leading, Dow theory buy signal. This is a bull market. Call me if you have any questions.